Happy Friday, Pat. Welcome.
Hey,
Hope
Rick,
your
how you doing, buddy?
voice is holding up. Your phone that your cold that you caught on the phone. That's
Yeah, the infamous phone cold or cold phone or phone cold that I caught over the phone with my
yeah.
friend that I mysteriously just happened to come down after about 15 minutes after talking to her, saying she
There's
was really feeling this is weekend. I go, just
stuff that goes on out there. I don't know, but
uh,
welcome to our millions and millions of viewers. And hey,
yeah,
funny story today. Um, I went to the Verizon store. I finally bit the bullet and got a big phone because I'm getting a lot of PDFs and I can't read the damn thing. But anyway, I walk in and the guy, takes my information. We go up and another one of the nice sales guys walks up and he goes, "Hey, it's the YouTube guy." And the other guy goes, "Oh, is this the guy you've been telling me about?" I said, "Wow, that's so funny and really great guy." So then I had to come home with the new phone and then transfer the information over and take, they told me to take my old phone back, which turns out I didn't need to do that. But so I went and gave him a Rick Helps coffee mug. So, but he said he's
uh,
following the market very closely, and he said he was going to buy last year, but he said something didn't feel right. And he said, so at that point, I said, I'm going to start educating myself on the market. So he's doing a lot of reading. He's taken some college classes and studying macro and microeconomics. And so sharp guy. It was a lot of fun. But
I mean, to be honest with you, I studied. I was econ major at Wisconsin, and this last couple of years, you might as well just throw the econ books right out the window.
yeah.
I mean, Jesus, I feel so stupid some days. I mean, but did you get an autograph and picture with him or
Oh no, and I won't even tell you what store it is because I'm going to let him maintain his privacy. But hey, speaking of things that don't work, I got to show you this. I just ran into this. I thought it was funny. Online launch August 22nd. This is a um, floating house in Panama, and this company was going to start building all these floating houses. And you see a guy here that says, "I just made an investment, looking forward to investing more, strategizing and promoting for the long haul." And they had their lunch, and well, they're supposed to float. Um, Hopes for the seamless unveiling of an impressive floating home in Panama quickly sank when the structure ended up becoming partially submerged. If there's one quality you're looking for in a floating home, it's that it floats. Without that, the only home it's really going to provide for is fish. I thought that was just hilarious. Sad though. Sad.
oh, it looks like some homes in Florida?
Yeah. Well, look, there's certainly not good news out there today. And I'm seeing, on my 7-day moving average that I track here, sales continue to go down over the past 7 days. A tiny, tiny little blip up there. And then see that spike up here, Pat? I spoke to it yesterday.
Yeah.
These are new listings coming on. So you have new listings and then back on market. Well, there was a spike in back on market, which tell me that there's a lot of them falling out. They were under escrow and they fell out. Well, that's starting to get more in line and coming back down, but it's still a downward trend once again. And so there's absolutely nothing that says that this is going to get busier going into the holiday season. Now, October, we usually have a lot more listings coming on, and we have an uptick in sales in October. But, we're going to show these interest rates in a minute and show you just how bad things are. But, the chart says it all right here. This is the listing success rate. It's not alarming. It's 97.2, but it looks terrible compared to how good it's been the past couple of years. You had a listing success rate of 101.8, which meant if you listed your home, you'd sell it unless you were a bumbling idiot. And then I have annual change in monthly median sales price. So you can see here that in May, year to date, we were up 33.1%, and now we're up 6.9. So we're still higher than last year, but by the time we get to January, that will go away. And then the Cromford Demand Index, I've spoken about this before, that when you see this gap between demand way down here and inventory way up there, that's when
Mm-hmm.
prices really take the bite. They're still kissing over here. And they're not, they're right here and they're not moving. It's just, again, it's that holding pattern that we're in. So I think that, we may see that change as we get closer to Christmas, but I kind of doubt that one thing, because you're not going to have more listings, and you're certainly not going to have more sales, unfortunately. And this is why your handy dandy little chart here.
Yeah. No, the numbers came out. The jobs report came out 263,000 versus the forecast at 250. So, I mean, I don't know. I'm just gonna get my take on it. Like you said, I'm gonna kind of talk about, because I kind of expressed to you my frustration. I'm just getting frustrated because it's just this market is just I think it's frustrating a lot of people, which is, I mean, I can feel it, but yeah, today, the 10-year treasury hit 388. There's high at 390. Right now you can see these are rates. I'm trying to flip I usually have the price, but usually these are rates now. I'm trying to be more conforming. People can see visually, but rates started August 2nd. I mean, August 2nd to, so really to September 28th, let's just call it 2 months that they've been on this stupid tear, because I mean, this is just, I mean, usually you get a break, you like here, you see the rates climb, then they kind of back off here. This has been just a steady climb the last, month and a half. And, now we're looking into October, obviously. So now we're starting to see some jostling going on. So hopefully my voice comes through. But, we're starting to see some jostling right around 4. It's been tough out there. Rates are right now. I mean, I'm going to flip this. I'll roll this chart over here and show you. I mean, you're looking at, I don't know if I can, hopefully you can see the number. We're looking at, this is one of my top price lenders. Like I said, I got this pricing chart that he shows all my lenders that I can, all the prices in different days or during the day. But this is one of the top price lenders, this bank out of Texas. But you're looking at, 5% down. You're looking at right now 6.875, which, I know there's banks, obviously 7.25, 7.5. Like I said, it was 6.875 with a cost of $475. I know, like I said, I know there's banks out there probably 7.5 plus. Like I said, I talked to you yesterday when we were with Jackie, to go from 7 down to say 6, that's 97. Let's just call it 3 points. That's 300 basis points that the market would have to move. The bond market would have to move it up a point lower. So I don't see. I'm just looking at this pricing. It's gonna. I think we're gonna be here for a while. And it's just, obviously we're still waiting on the data to tell us a new story. But until then, it seems like it's the same old story: inflation, and the jobs report, and the CPI is coming out next Thursday. But another thing is too that's been banging, like you said, like you had mentioned, the United Nations is kind of telling the Feds, "Hey, cool the jets," and because the dollar's gotten very strong, the dollar being really strong has obviously hurt import-exporting balance. So
it's hurt emerging markets. It's
it's
making
just
everything expensive for them, and so they're getting pressure from the UN. They're certainly not getting any pressure from our treasury. I remember when Janet Yellen was telling Congress when she was she was already a treasury secretary. No, she wasn't. She was Fed chairman. She was saying, now's the time to borrow because the money's basically free. And I kept thinking, yeah, but if rates go up, it's going to cost us a fortune. And so the borrowing, she was encouraging as chairman of the central bank, saying, borrow as much as you can now because the money's basically free. Well, that's not long-term debt that the treasury borrows. It's short-term debt and gets reset at one time And here we go. So we've got a real storm on our hands. You showed that chart there, how much it costs to buy down to another rate. And
Yeah.
we got an offer that came in and showed on the pre-qualification form rate not to exceed 4.99%. And it's from our rocket people out back east, right? And I'm thinking, well, their own website shows they're at 6.63. So, you're giving me a pre-qual that says 4.99. So I call and ask, and the guy that wrote the pre-qual has the day off. So he passed it to another guy who doesn't know, but he'll get back to me. And I haven't heard back from him. I've called, I've emailed, nothing. So I talked to the agent this morning while his dog was barking, managed to get a hold of him because he wouldn't answer email. And I said, what's this about? And he goes, well, she's moving and her employer gave her $15,000 to buy down the rate. But I still need clarification. Is she locked in at 4.99? And you're saying if it goes above that, she can't get financing? We need answers before we say yes to this contract. And the agent says, I'll see what I can find out. Hasn't answered email, hasn't answered phone, hasn't answered the text. I'm not going to accept this contract unless these guys, agents, step up your game, answer the phone.
Well, it's been, I think, I mean, this market's been just weird. I mean, I'm going to be a little unprofessional. I mean, I'm just kind of pissed. I'm pissed at the feds because they haven't, these guys, I'm just going to be a little unpolitical, incorrect here, but these guys have not got anything right the last 2 years. I mean, they got these, I'm frustrated because we're being led. I know I'm getting a little torched here because it's just, I'm frustrated with the rates going from 3 to 6. I mean, that's not a balanced market. When you see in those 6 months, we've had a couple year movement in rates happen in like 6 months. It should have been more of a gradual.
Yeah, they didn't have to do it that quick. And
I think that's the thing is that Guggenheim money managers, Guggenheim is a pretty big money manager. They said the feds, they feel that the feds will pause the hikes here soon because and they're saying that the inflation could fall just as fast because they hit the accelerator very quickly. Now they're probably going to have another move, but it just pisses me off because these guys have not had anything right. Nothing. I mean, I'm getting sick. I mean, I'm looking at these rates, they jacked them up. They created this vacuum of rates. I looked at those numbers that, those people, remember I've been preaching for the last year about people being the rate lockdown. There's 45 million people. I look back at the numbers. I recalculated numbers. There's 45 million people at 5% or lower, which is, there's 68 million. So, or I don't know how many number of mortgages are. I think it's at 9 out of 10 are like at 5% or lower. So, this has created a vacuum of homes now that people aren't going to move. And now you got these other people out there that are sitting there with their, in a boat with no oars because you got, high house prices and it rates at 7.5%. And I'm just getting disgusted by these guys being so behind the 8 ball. And that's why I think it's going to come back. Rates, they've been pumping them up. And that's why I think the middle of next year, you're going to see obviously back down, but these guys are just idiots. I'm just getting tired of seeing Yellen.
I'm glad Yellen's going to get out, but I'm
tired of these guys. I
want to jump in, Pat, and answer a couple of questions. One of the guys said,
I had to get off my soapbox here.
Oh, no, I'll let you back on in a minute. Back on the market, listings could also be sellers who stepped out of the market in hopes it would stabilize. I agree. But when I was going through and looking at them, I was seeing more and more of them that had a fallout date attached to them, which, because we always have a certain number back on market, but for some reason it spiked by about 250 to 300 homes. And Mike says, do you think attributing surge is people who couldn't sell, so they moved to renting? I didn't see if these are homes that are back on the market, so not canceled. if you were going to sell and you want to turn a rental, then that's canceled or expired.
Mhm.
Now, expireds have been spiking at the end of the month. We usually get 400 at the end of the month. Last month we had 550. This month, at the end of the month, we have 750 expires, I believe it is, and
Mhm.
that's a pretty big number. And that's just people that said, they gave their agent a 3 or 6 month listing. Um, I tend to not go out more than 3 because if I haven't sold your house in 3, you're probably going to fire me anyway. So,
Yeah. Yeah.
so I so there will be refinance business if mortgage is taken out today. Yeah, one of these
Yeah.
days, Brendan. But I think Pat, to your point, it's weird when you go back and you look at it historically. I mean, they got beat up in 2018 when they raised rates because they thought the economy was getting too hot, and he
Yeah.
immediately backed off. And then what happened was in 2020, everything globally stopped. They jumped in because they felt they had to put the gas on, quantitative easing, buy mortgage-backed securities, buy treasuries, flood the market with cash because everything was about to collapse. But it seems like, and I don't know, I'm just an old bread guy and realtor, but seems like they could have pulled it back
A lot sooner.
gradually a
Yeah.
lot sooner. I mean,
Yeah.
even
Yeah.
Greenspan came out one time and said,
That's what I mean.
the
That's what
market's getting frothy or
yeah.
exuberant.
That's what I mean. That's why I'm getting frustrated because these guys are going from one thing to another. Just it's like this, extreme. And the market, the VIX, the implied volatility, the volatility is at a high point right now in the market because there's no stability. And the Feds, that's their job, is to bring stability, and they're doing the shittiest of jobs of stability. They're going from one extreme to another, and that's why them coming out and saying and that was just a stupid remark when they said inflation is temporary. I mean, these guys are supposedly the smartest finance people in the world, and they you and I were calling that 2 years ago. Remember in the last March, in 2021, saying I was saying this is not temporary. So I'm frustrated because it's hurting. Business is down for everybody, but it's hurting, the average person. It really does. I mean, there should be an opportunity for the first time home buyer because things have slowed down enough where you're getting seller concessions. Prices have come down 10 to 12%, but you got, the rates are, still high. I think they will come back down. We're in this, like Barry Habib, remember a couple weeks ago, I said, there's a bridge. We're just going across a bridge. It's icy right now. And, we have to, this is part of the plan, but boy, is it frustrating because I'm just, you're talking to some people and they want to buy and it's like, hey, 7.5%, their numbers are just, are poking up to be too high, in terms of qualifying.
Yeah. And it's just, like it's too expensive to buy the rate down now, and you just kind of have to sit it out. And it's too expensive even for sellers to contribute enough to help buy your rate down.
Yeah. I mean,
Brendan says he's noticing rents are dropping in Phoenix metro area, so the signals are clear where things are going. We always go up really fast. We tend to come down much slower, and
that's the thing.
and that's what we're seeing. If you look at our prices right now, compared to the rates, it's pretty damn obvious. There's not very many people that can afford to buy a home.
Yeah. I mean, it's, and that's the thing is that, Paul said, he wants to knock, he's obviously trying to knock the housing prices down with the high rates, but how much is that going to really, I mean,
yeah, I don't know how much, but the unknown is how far down is it going to slide? I was looking at Open Door again today. They still have 1,500 listings. I did an MLS search where you can sort them according to the MLS number. So I sorted them as ascending. So it gives me their oldest listing first and then comes back from there. And they have a lot of them that have been on the market over 100 days. And they've had one major price reduction. And then they just seem to be in a holding pattern right now. It's been out there 100 days. I think I have.
That's why I think I read something the other day that, there's just, because you try to gather information, and they're saying that, they see housing prices kind of going sideways to a certain degree.
Well, that could be. Here's one right here. I'm gonna pull this up and show it to you as long as I'm bringing it up.
Yeah, Brennan. Yeah, rent, and that's the other thing. I think rents are kind of subsiding. They are cooling off a little bit, no doubt about that.
So, Arfo's asking if you have the chart available. I'll pull up the rental chart, but I don't think it's going to show much right now yet. But look at this home. This is out in Tempe. It's 442,000 days on market on the bottom here. I don't want to show the agent down there, but 177 days, 566,000 original asking price, down to 442 right now. And it's been on the market in Tempe, and it's not a bad looking little place if you like wood. They put in new carpet, painted, and but still 177 days.
Yeah.
Yikes. So, and there are a lot of those. So I'm going to pull up. He's asking if we can do the average rent here. Let's see if I can find it. And he also wants to hit the labor market. Doesn't make sense. Well, every time they clamp down and try to pull back, they want to hit the labor market. But what did we see today?
Yeah.
They haven't hit it yet. So we are seeing a turn in rentals. Excuse me, this chart's a little small. Let me see if I can expand it up there for you. Yeah, I mean, they've $1.36 versus $1.40. So it goes down pennies at a time. And this is on an average off the multiple listing service. And that's not Jackie, it's Jordan. Oh, hi, Jordan. Stealing mom's computer. So the multiple listing service won't show your average corporately owned apartment. So they're probably dropping prices faster than the average person's doing on the MLS. But getting back to the labor market, I am reading things that big companies like Best Buy are not going to be hiring as many people as they did last year. The anticipation of sales being slower. So the unemployment numbers will no doubt go up, but I don't know by how much.
They're usually out in the future. I mean, it's kind of a lagging indicator. They catch up finally. I mean, I'm reading too that some of these big companies, some of the tech companies, the tech companies are not getting as aggressive as hiring either. I mean, there's a lot of rumblings that I'm hearing, just that things are going to slow down. But once again, I think the Feds are going to be behind the 8 ball. And once again, I think we're in this tide. The water is moving not moving the right way right now. But I think once it comes back, it will come back. It's one of those, we just got to ride it out.
Well, and it's interesting too. And I spoke to it yesterday when you and I were on the call that my activity on the website has picked up. In other words, the average future home buyer out there is now going, I want to keep my pulse on these prices and see if things are moving. So they're going and looking. Well, I'll bet you Zillow's traffic is way up as well. Those people are saying, I want to stay on top of this. If it's going down, I want to see it. I want to see if the house that I like has moved at all. And, that tells me that there are buyers out there. They're waiting for their moment. Everybody's moment is different, but they're going. And
well, I think you're so true. I mean, just jump in. I think, like we talk about the last couple of months, that there's that big pool of people that still have, they put in those bids. Those people that were putting bids in, that were doing 30, 40 bids in a house last year, they're out there. And it does come down to supply and demand, but it's just like you said, it's frustrating when I see, this market being whipsawed by rates. And
the young man I met today, he said he was out looking and he was looking at these prices, and he'd owned a place before. He owned a condo, and it took him a while to get out from underneath it. And he said that he just something doesn't feel right. And so he started kind of doing some reading and looking, and he said, and he had people tell him, well, this isn't at all like 2008. And he said, well, I don't think it has to be like 2008 to not feel right. Something doesn't feel right. It feels like it's it's going up too fast and maybe I should wait. He said he had a realtor in last week. He was selling a phone to, and he said something about real estate. He goes, yeah, boy, things are really slowing down. She goes, oh no, the market's good. And he
Who
goes,
said that? Some realtor?
yeah. And he goes, really? And she goes, oh yeah, next year's going to be great. Are you kidding? It's not going to slow down. And I said, you probably just kind of chuckled, didn't you? He said, I just, yeah, I mean,
Eternal
I'm not,
optimist.
yeah, but it's okay. I said, she must have just left the title meeting. So
Yeah.
Brendan says, how is the ARM market doing in comparison to 30-year fixed? These products require lower loan to value ratios, but it's a great way to save money during these tough times. Are you seeing more of those? Or is that
Actually, on our side, the only way you can really get a good ARM is technically through, I mean, what I'm seeing is through credit unions, private portfolio banks that have got their own money that kind of, lend out their own money. They're loaning out, they have a very competitive 5 and 7 year ARM. On my side, and on the retail bank side is the ARMs are just, they're crappy because the yield curve has been inverted. Short-term rates are higher than long-term rates. So actually you pull up a 5 or 7 year ARM, you're like, it's like 7.25. You're like, you got to be kidding me. It's not with the inverted yield curve. That's what's causing that. There's this one jumbo product. There's this one bank out of Florida that does have a very competitive, you do find it has a very competitive jumbo ARM. They have a very competitive jumbo ARM, like basically $800,000, $900,000 loan amount. It's very competitive. It's like, I pulled it up, it's like 5.25 on like a 7 year ARM, which is, it's pretty attractive in this market, but it's little, these ARMs are little niche programs. They're not all encompassing for everybody, if that makes sense, Brennan.
Yeah.
I mean, you wish it was just like this one, like, hey, here's a jumbo ARM for everybody. But these ARMs and jumbo ARMs are very niche in terms of, specific, like $1 million and higher or $800,000 and higher and a credit score of this. But just in general, no, the ARMs have not been as helpful right now because, like I said, the inverted yield curve. But and also too, another side point is the banks don't want to be, lending money at, say, a higher, short-term rate, and then rates do fall. People are going to, that loan's going to fall right off the books. It could possibly, because it's a short-term loan. So, there's a couple of, factors that play into that. But to answer, that's my long answer. But I mean, yeah, in general, there's no place to hide basically, in terms of trying to find that one, great loan rate.
Well, there's still a lot of cash out there, and I'm seeing a bunch of that. I had an irritating text this morning, and this, how you don't get them, but I get them all the time. And agents watching you get them too. It's like, hey, Rick, do you have anything that out there that I can purchase? And I get 3 a day at least. And a guy sent me one this morning, and he says, hey, Rick, I never got an answer from you yesterday if you had any distressed properties. And I thought, okay, well, now you don't deserve an answer. I mean,
yeah.
If I get 3 a day. If I didn't answer you, it just means I missed you. Something else happened and I forgot to say, no, I don't have anything at the time. But if you're going to pepper me again and say, I sent you a text yesterday and your answer, I just go bleep.
Yeah.
Well, you're not gonna get it.
Yeah, really. Exactly.
So,
but, so what, my overriding question, and people are, out there, I'm trying to sit back the last couple of days and like, what, not that we're, I know people try to get information, like say from us, just give it a general landscape, but, if I was watching this, I like, okay, what I'm looking to buy, what kind of advice do you give people, or what's the landscape? I mean, I think I'm trying to give people the landscape of this. I think it's going to be rough sledding, but I think it will we got another 6, 7, 8 months, but I think we will calm down. But I don't know, what's your take on it? I mean,
I think it's going to be a very, very rough 6 months.
Yeah.
I don't see rates turning around. So I don't care. I mean,
Yeah.
the UN can stand on their chairs and scream all they want. I don't see Chairman Powell making a pivot at all. He's trying to fix this economy. But, if the credit markets freeze, if we have a real liquidity problem.
Oh, we're seeing that right now. I mean, jump in. I mean, that's what we're seeing, the volatility. We're seeing the liquidity in the treasury market. That's why we're seeing such swings in the bond market. Today was, the 30-year, 5-year percent coupon was down 28 bips, but we've had swings of 50, 60, 70 points. That was very rare. Now it's like a regular day occurrence, like 30, 40 bip move in the bond market. So the market's saying it's trying to find a spot, and it can't.
Well, and it can't, because every country England threw everybody a curve 2 weeks ago.
Yeah. Yeah.
When they said they were going to cut taxes, and then they said they're going to increase quantitative easing because they ended up bailing out these pension funds, helping these guys.
Now we know how important the Queen was.
That's right. Yeah.
She could have hung in there. She hit the fan when she died.
Yeah. Hello, we probably shouldn't be doing that. That's my worst English accent ever. But but normally we kind of all do things in lockstep, right?
Yeah. Yeah.
Japan and Western Europe and now everybody's like, I'm going to try this. I'm going to try this. I'm going to have loose monetary policy. No, I'm going to tighten up. It's going to be tough. According to Danielle, Rick, you got anything under 300K? Yes, I might have something tomorrow. Reach out to me and I'll send you the information. Send me an email at rick@rickhelps.com. All I see is pain for the rest of the year. We also have earnings beginning next week.
Yep. I do too. I mean, I see pain for again. I think there'll be some relief. I think like I said, I'm not. If we see a change in November, I think we will see a little, roll. It'll take some time, but that's my personal opinion. I mean, I think in November, if we get a change, get some things moving the right way, because they want to take care of this inflation. They could do it. They could do it a lot quicker than they're saying that they're doing it. As far as I just believe, this oil and gas thing has been that is the major component for all these products, moving the product, making the products. And, when you've got, oil and gas where it's at, I think it just has caused a lot of pain for a lot of people.
In the case of a rate buy down, does it adjust later or is it fixed? Most of the products have been fixed.
Fixed. Yeah. It's fixed. Yeah. For 1 and 2 years. Yep.
And some longer, but it's going to cost you a pretty penny now. I read an article today that there's an idea being bounced around to limit oil exports. Oil is produced in the United States, and that is something that would backfire miserably because the price of oil is dictated globally. So if the United States decides that it's not going to ship any of its oil to any other countries just to help it here, that's going to make the price of oil per barrel to go up because you've created a shortage globally. It's just the dumbest. It's like, we're from the government. We're here to help. It's the only thing we haven't seen them do, which I hope they don't do, is try to get in and interfere with grocery pricing and interfere with people's wages by thinking that that's going to solve inflation like Nixon did in the 70s. I was always marking groceries up every day. And then they came in and said, you can't raise the price of meat unless it's a different cut of meat. So that's where he ended up with these steaks called Select. Yeah. All they did was change the name of them. And so that's, we're going to have midterms coming up. Two refineries in California are shut down now too. November crude future at 93. I don't know how they're going to get it down with their current plans that they have right now. Oil prices, I just don't. And I think, and I'm not a global political savvy guy, but all I see is rampant stupidity at the moment. So I do.
We kind of know where you stand.
You're doing what?
So, I mean, I feel bad for, like I said, I'm trying to, the average guy who's just out there trying to look at buying a home. And, like I said, this is turning into be, this is going to be a tough time. And I see pain, it's going to be a groggling type of market. It's not, going, nice and smooth one way or, it's just frustrating. But, I think the period of time that, there will be a time that you could, I think there will be an inflection point where things are, prices have come down or rates have come down where some people can jump in. Once again, I hate that date the rate, type of thing where they say, it is true though. You can, if you lock in a rate, you can, hopefully eventually refinance it. But that refinancing is not these bankers that say, oh yeah, you can refinance down the road. Is that a guarantee?
No,
Christ, let's say if rates,
that's like the people that told you back in 2006, oh, don't worry, your home's going to be worth $60,000 more in 2 months.
Yeah.
Well, how'd that work out for you?
Yeah. I'm not trying to be, Debbie Downer here, but but I'm starting to see psychology. People are getting restless. I'm getting restless.
Yeah. To answer Sean's question, should I wait as a seller? It depends on your situation. If you're getting good, believe you have a rental. If you're getting good cash flow from it, I don't see any pressures where that cash flow is going to erode. It may go down a smidge because the expenses to maintain the house are going to be increasing. Rents are going to be coming down slightly, not a whole lot, perhaps. But it's not a bad time to sell a house either. There's 2,400 contracts being written every 7 days. And depending on the price point, they are bringing in action still from people in other states that are putting in some pretty decent down payment amounts, and rates are not giving them much of a hiccup. So, I think as far as timing around selling, October's pretty decent. But November, December, your foot traffic's going to slow way down. And I'm waiting for my $950,000 cash house to buy $1.3 million that they're asking now. Yeah, I don't know how far that one's going to go down, but we'll see what happens. But now, Jeremy, you're an example right there. You got your eye on something and you're checking it. And that's what I'm seeing on my website. People are coming in, taking a look more and more now at a higher rate than I've seen in the past year, quite frankly. Even when things were hot, I wasn't getting that much traffic. But now that people are smelling there might be an opportunity, they're in there looking. So
and that's why that once again, I think that takes out, the doomsdayers that say it's going to be a crash. I'm frustrated, but I don't see a crash. It's just that I see this kind of the stale market, just kind of, moving along here, just grinding. We're in a grind out type of market.
Yeah.
And I think the people who are looking to buy are still, there's still buyers out there, and people are kind of getting used to the, once again, they settle in now that, the 6%, 6.5% interest rate, it's almost like a norm now. So,
yeah. Yep.
People get used
Pat,
to
I'm gonna let you go and wish you a happy Friday, and I hope your voice is completely back to normal by Monday. And just
I'm glad I got some
talk to sick people on the phone.
I'm glad I got some stuff off my chest today. I feel better.
Yeah, there you go. Go take it on the weekend.
I just got to beat somebody up here.
All right. Thanks to our millions and millions of viewers. Don't forget to smash that like button and subscribe.
Take care. Bye.